how to spot big swing trade wins with high beta stocks such as NEO, DraftKings, and Ethereum, and focus on opening and managing winning trades and failing fast on losing ones. If you want to learn how swing trading only $10,000 for NEO made me $5,000 in 6 weeks, then let me explain how to manage these type of swing trades. I did this by buying stock, but the same could have been done with buying at-the-money call options with sufficient strike time, and leverage would have paid even more. Now, past performance isn't indicative of future results, but if you can't see how the strategy worked in the past, then good luck in the future while flying blind. One of the simplest and most effective ways to spot a winning trade is to use the 5 EMA crossing above the 13 EMA on the hourly. So what is an EMA? An EMA is an exponential moving average that involves a whole lot of math that I'm not so sure you care about, but if you do, then Google it. Instead of a simple moving average that weights time frames equally at its closing prices for each candle, it weights the most recent time frames closing price more than older closing prices. When the 5 hourly EMA blue line crosses above the 13 hourly EMA orange line, plus ensuring the relative strength, also known as RSI, isn't too high, this is typically a buy signal. However, just relying on technical analysis can be dangerous at times. Considering market dynamics and other fundamental information is important as well. Plus, if a large wick has formed above the buy signal, this indicates trapped liquidity. And understanding these type of trade factors are important when considering opening a trade, as nobody wants to become trapped liquidity. If I see this, I will typically set a stop order buy just above the wick to ensure I'm buying into strength on a breakout versus potentially buying into weakness or a retrace. More on retraces later when we talk about Fibonacci levels. After buying anything, the next thing anyone should be focused on is hitting the subscribe and smashing that like button. So if you haven't done so, please do that now. Actually, right after buying the equity, attention needs to be focused on how to exit the trade, both from a stop loss that protects the cash that is tied up in the trade and a take profit which helps maximize gains. But how does somebody know the optimal take profit and stop loss levels, especially when it differs for every stock and index? There are many ways from a technical analysis perspective to determine an optimal stop loss. One such good rule of thumb is to use ATR, the average true range, and multiplying it by 1.5. However, this may not consider how well the equity performed in the past. When it comes to take profit level, you've heard that you should always try to at least have your winners gain double your losers losses. So another good rule of thumb for a take profit level is doubling your stop loss. So we'll evaluate these rule of thumbs in a bit, but remember that waiting too long to take profit can result in losing on a winning trade, or taking profit too early can cause cutting a winner too short and losing out on opportunity. The best way to determine both is to backtest years of data using an algorithm to ensure those have been nailed, and this is exactly what King of Swing Trading has done. These have been determined and are built into our algorithm, where a notification is sent to our Discord for not only when to buy to get into the trade, but the optimal time to take profit and when to stop trades. More on this later. Let's take a practical look at backtesting with a real-life example in NEO. Now, NEO has only been public since September of 18, but King of Swing Trading typically evaluates over the past 6 years for any stock and ETF and the last 18 months for crypto. So instead of using the optimal values for NEO, let's see how listening to your uncle who told you to YOLO your account by stopping anytime you lose 1% of it, or taking profit when it goes up a minimum of 2%. And of course, this assumes you're using the same system that maximizes take profit as King of Swing Trading. This doesn't end up too bad, but there was a significant drop in profit and win percentage. And following rule of thumbs we mentioned earlier are even worse, as their stop and take profit levels are less profitable. And when you win less than 50% of your trades, you will lose interest quickly in trading, even if it is a good trading system. If you can't learn from the past, then you are likely to spend more time learning and with your own money at stake. Now, who wants to do that? Not me. For NEO, King of Swing Trading backtest has nailed the take profit and stop losses, as NEO is profitable over 60% of the time and has a profit factor of close to 1.6, and typically anything in the range of 1.5 to 2 will suffice. Also, the net profit is over 3 times the traded amount. Now back to when first entering a trade. What do I look for? Well, the best moves just take off, but sometimes they plant a pole and will do a retrace until a particular Fibonacci level, what we will call fib levels for short. You need to start the pull at the bottom and not where the breakout was detected, and make sure you draw the tool to the top of the flag. There are three most common areas for fib retrace levels, and they are the 382, 50, and the golden pocket, which is between the 618 and 786 fib levels. The retrace to the 382 is the strongest, indicating great follow through is expected, followed by the 50, and lastly a spike of the golden pocket. Typically, if the golden pocket fails or we get a full retrace, then say goodbye to the trade, as it is most likely either already stopped or on its way to getting stopped out. In our second example, my favorite kind is when it is an impulsive trade, when we got the buy signal and never looked back. One thing for sure is that if the stock price is climbing the 5 EMA, selling it will never cross my mind. Like they say, the trend is your friend until the very end. If I haven't made the optimal profit, I don't want to exit the trade too soon. And if I simply waited for the 5 EMA to cross back below the 13 EMA, I may lose too much profit. Also, like I said, every time a cross occurs, it isn't a reason to sell, especially if I haven't hit my optimal profit. And even if I did, maybe the stock isn't overbought or momentum hasn't reversed, which should all be reasons to hold versus sell. But once the algorithm achieves an adequate take profit level, according to backtest results, if it appears I'm losing my trend as demonstrated by the average directional index, ADX for short, the algorithm will signal to lock in profits by selling half the trade and moving the stop loss to a higher price, which I call protecting the trade. By doing so, even if the remaining trade gets stopped at break even, I walk away netting half the amount of where I protected it. But even if the trend is okay and not indicating a sell-off, if a cross of the 13 below the 5 EMA occurs, a momentum indicator will check to see if momentum has been lost at the same time as the stochastic indicates the equity as being overbought and thus closing the trade. So far we've been talking only about winning trades and locking in profit, but losers do happen as well, and it makes sense to discuss not only when to hold them, but when to fold them. Just like it doesn't make a whole lot of sense to take profit until I hit the optimal take profit, it doesn't make sense to get stopped out until I hit the optimal stop loss. In the case of king of swing trading, if the equity is trending downward hard on the 5-minute candle, as the king, I issue a stop prior to the algorithm sending out a signal at the close of the hourly candle, which happens on the 30-minute mark of each hour, 10:30, 11:30, and so on. So if the 5-minute ADX confirms a strong downward trend by seeing a steep slope upward, most likely we are in a strong sell-off, and it is better to lose fast than lose big. But if a strong trend isn't occurring, then it makes sense to remain in the trade until the optimal stop level is breached. Being that the stop level is based on the close of the hourly candle, if the trend isn't strong, I'll let our algorithm make the final call, as wicks can occur below stop levels. One thing I always make sure of is that if I'm not going to be able to monitor a trade, I always set hard stops with a little wiggle room, as once again, it is better to lose fast than lose big. Trading without stops when you are not going to be able to evaluate trades by setting alerts and getting notified is a losing proposition. You need to treat money as a business, or trust me, you'll go out of business. Also, hoping that something returns to cost basis isn't a strategy. That's considered luck. With over 50 stocks and indices tracked by King of Swing Trading, trust me when I say there's always another trade available. So taking a loss is part of trading, just as long as losers don't outpace or outgain winners. Once again, who can track all this technical analysis on the fly for even over a few stocks and indices, let alone 50 like King of Swing Trading? This is why King of Swing Trading allows you to watch what I'm doing and follow along with simple buy and sell signals in the Discord. A majority of trades work, and I share my winners and losers, so you can see my win rate of over 60% is not only back tested but real. And winners outgain losers by close to 2 times, which helps me make royal bank. Check out our Discord to see our real winners and losers. You can do it for free by visiting our free Discord link in the description below. Now, technical analysis is great until it doesn't work. That is why I, the king in the Discord, helps you understand what reports are occurring on the economic calendar, plus Fed speakers, when earnings are happening, or even if Black Swan hits, what I'm doing with my trades. And all of this for only $5 per month. This is a tremendous offer when you consider the Discord, as it also includes daily pre-market analysis in the Morning Java channel, which sets the stage every morning, and if futures start to rev up, I add my commentary to the stock futures channel. And as the algorithm posts signals in the swing trading signals, I give my feedback on no trades in the signal exceptions channels, as evaluating factors can be challenging and any technical analysis promising to do so most likely is not going to have the profitability it claims. Throughout the day, other meaningful non-related commentary is posted about the market in the market analysis channel, and a wrap-up is provided daily as well in the wrapping it up channel. The price will only go up in the future, so lock in today at the low rate of $5 per month. As I plan on making more educational videos in the future, breaking down some of the content I covered today in further detail, make sure to leave comments and questions, and by all means subscribe and get notified so you can learn more on how to spot and win more trades.